This will be the only ICT model that you'll ever need to become consistently profitable trading ICT concepts. I'm going to be covering literally every single thing in the start of this video. We're going to be going over my A+ entry checklist criteria, risk management, where to take partial profits, where to close your full position, where to place your stop loss, when to trail your stop loss, and the list goes on. Literally every single thing that you need to become profitable trading this exact model we're going to be covering inside of this video today. So towards the end of the video, you have a complete system from A to Z that you can copy and paste yourself and make money in the markets. Now towards the end of the video, we're also going to be breaking down this absolute bang of a trade that we took this morning that ended up running for over 85 handles in profit on the NASDAQ. And that trade was this exact same strategy that I'm about to cover in this video. So I made around $5,000 across 20 funded accounts. And it wasn't only me that made money on this trade. It was also my one-on-one students that took the exact same trade as myself without any guidance. They didn't have to rely on anyone other but themselves because I've taught them so well. So I'm going to pop up a few screenshots on the screen right now. So you can see a clear pattern with all of these screenshots, right? My student Ken, he took the exact same trade. My student Josh, again, same thing. He took the exact same trade, same entry, same exit, same TP, same stop loss. And the exact same thing with Demi as well. All of my students have one thing in common, and they trade the exact same way that I trade. The one thing I notice with all of these social media influencers or mentors is that they teach people and the students end up taking completely different trades that the actual mentor is taking himself, which makes no sense at all. If you're teaching someone a strategy, you should end up taking the same trades every single day. So before I get into today's video, I want to make a quick announcement. I've just opened up 5 new spots for the one-on-one mentorship program. So if you are someone that's interested in getting your trading to the next level and you're actually willing to take this seriously and treat it as a long-term career path, not a short-term side hustle, gambling type of thing, and you're actually willing to put in the work and you're waiting for the perfect moment, there is going to be no other moment than today. All right, it's 2026. It's a fresh start. It's a fresh year. If you are someone that's actually ready to take their trading to the next level, I highly, highly recommend that you check out the links in the description below, fill out the application form and apply. There's many traders out here that are not putting 100% of effort into this skill of trading, and they're getting tired of guessing. They're getting tired of watching ICT videos, going through different free mentorships on YouTube and seeing absolutely 0 results. Why is that? If you don't put all your energy into this skill of trading, how do you expect quality results? It makes 0 sense to me. So I'm going to leave you with this. If you want to learn from someone who's actually already done it and has achieved the results that you want to achieve, make sure to check out all of the links in the description below, fill out the application form and apply for the one-on-one mentorship. There's only 5 slots available right now. Once those 5 slots are taken, we'll be closing down the mentorship. So don't let this opportunity just slide by, actually take action and let's get your trading to that next level. So other than that, guys, let's jump straight into today's video. All right, so first things first, this is the trade that we took in the morning. As you can see, absolute banger. Number one thing that's the most important when you're trading this model and that you want to look out for is going to be a sweep of liquidity. So what is a sweep of liquidity? Any 15-minute swing high or swing low is going to be considered as a buy side or sell side liquidity level. We want to see price come up and sweep that level, or either come down and sweep that level, okay, depending on the direction. So it's even better if we sweep session liquidity like London lows or London highs, or even Asia highs, Asia lows, right? That's 10 times better. So if you don't really know the session timings, London is from 2 a.m. to 5 a.m. New York time. Asia is from 8 p.m. to midnight New York time. So if we jump into the 15-minute time frame, we can see, right, price has come up. It swept this swing high here, buy side level. There's another buy side liquidity level here, right? So we've swept multiple buy side liquidity levels. Now, if we actually zoom in closer, you can see this is a London high because it's at 2 a.m. So anywhere from 2 to 5 a.m., the highest swing point and the lowest swing point is going to be your London low and London high. So this would be your London low down here, and this would be your London high, which was created at 2 a.m. So price came up, it had swept London highs. Now, if we zoom out as well, we can see 8 p.m. to midnight. This was the highest high here. We also swept Asia highs. So we've swept Asia highs, we've also swept London highs, and we've also swept a 15-minute buy side liquidity level. So looking at the 15 time frame, everything to me right now is screaming bearish. Okay, I'm looking for a reversal. All right, so the second thing we'll look out for is going to be a displacement in the opposing direction. So if we've just swept buy side liquidity, we want to see price displace in the opposing direction lower. What is a displacement? An aggressive move either higher or lower, right? So if we zoom in, we can clearly see on the 1 minute time frame, we've had displaced, okay? This candle here is a displacement candle. Now, what comes with a displacement candle? A market structure shift and a fair value gap will usually follow the displacement. So what is a shift in market structure? Any swing low that's broken through or any swing high that's broken through, that's a shift in market structure. So we've broken below that swing low, we've shifted market structure, and we've caused a fair value gap. All the fair value gap is just an imbalance in price between the first candle's low and the third candle's high. That inefficiency there is what we call the fair value gap, which is our entry model. So looking at this price leg here, guys, right, you can see, when did this move start? It started from this candle here, okay? So you're gonna mark out from this candle's wick low, where has price stopped heading higher? Where has the move stopped? Price ran. Eventually it stopped up here. That was the highest point of that price leg. Now, looking at this price leg in the comment section right now, where would you target as your first TP and your final TP? All right, so hopefully you've paused the video. That's a learning opportunity. Anything above 0.5, 50% is gonna be considered a premium. Anything below 0.5, 50% is gonna be considered a discount. So if you are going short, you wanna go short inside of a premium and you wanna target a discount. If you're going long, it's the complete opposite. You go long in a discount and you target a premium. So with partial profits, we'd like to target internal liquidity, internal range liquidity, which is resting either in a premium or a discount. So as you can see, we have a internal liquidity sell side level down here, right? Which is resting very clearly in a discount. It's below 50%. If I have my entry at the fair value gap, that's gonna be my first TP area. Stop loss placement, you always wanna put your stop above a swing high, risking no more than 30 handles. Okay, if you're risking more than 30 handles, the next best place is gonna be that displacement candles high. So you wanna cover the imbalance at least. That's the minimum stop loss placement. Now, if you can put out the swing high and you're risking no more than 30, great, make sure to do that. That's gonna be the best area to have your stop. After I take partial profits at internal liquidity, where am I gonna target next? I'm gonna target external liquidity. So looking at this price range, okay? Anything inside is gonna be considered internal, and anything outside is gonna be considered external. So if you can see here, right, this low is outside of the range. This is gonna be considered a external sell side liquidity level, right? So where I'm gonna be closing my full position, it's gonna be this low down here. Now, very, very important, okay? Pay attention, this one's very strict and you should always stick to this rule. Always enter inside of a 30-minute time interval macro, okay? So there's many macros. We have the 9:45 to 10:15 macro. This trade specifically was actually taken in the 10:45 to 11:15 macro. All right, so as you can see, I've drawn out a little, okay, so as you can see, it's 10:45 exactly. Right, let's see if we get an entry. Boom, 10:46, literally 1 minute inside the macro, we've already had an entry. That's a very good sign. So we've had the sweep, we've had the displacement, we've had the shift in market structure, we've had the fair value gap. Do we have a very clear drawn liquidity where we can target? Yes, we do. We're short inside of a premium, we're targeting internal range liquidity, resting in a discount, and we also have a very clear external sell side level that we can target to close our full position. Are we inside the macro? Yes, we are, okay? Everything is getting ticked off in the checklist. If you're not trading like this, guys, don't expect to see results and don't expect to become profitable, okay? You should always be using a specific checklist criteria. If you're not, and you're just blindly entering whenever you feel like it, I'm sorry to break the news to you, but you're never gonna become profitable trading like that. You're just not, okay? You're competing with multi-millionaire and even multi-billionaire and trillionaire and banks. These banks are not trading that way. They're not just entering whenever they feel like it. So have a specific checklist criteria that you follow each day and stick to that religiously, because without a system, without a plan, you're not gonna see any results. So let's see how this trade will play out. As soon as we break that swing low, guys, what you want to do is you want to start trading your stops to the next swing high. So next swing high will be here. Now you're risking 11 handles. Okay, you've reduced risk. Price is very close to that TP area. Now let me tell you why you wouldn't go break even just yet. Because price can go back up and stop you out. Okay, this is a protected swing high. In theory, it shouldn't go back up there. If we're correct on that draw, it shouldn't really retrace back up and break above that swing high. If it does, your trade's been invalidated. Okay, this swing high rebalanced a bearish inefficiency. That's a protected swing high. It should not go back up there. If it does, the trade's invalidated, so be it. Okay, but keep your stops there. If you move your stops to break even too early, you might get stopped out. Always move your stops to valid structure points. So we've reduced risk, risking 11 handles now, and we're getting very close to TP. Let's see if we can hit TP1. Boom, TP1 smashed. Okay, once TP1 gets smashed, you can close out a partial, whether that's 50% or 60%. Whatever you want to close out that you're comfortable with, take a nice partial. Okay, reduce risk and reward yourself. With me, usually I'll be closing around 80% of my position off at a 1-to-2 or 1-to-3 risk to reward ratio. That's my average risk to reward. And the remaining 20% I just leave to run towards that external sell side liquidity or buy side. If it goes there, amazing. If it doesn't, I'm not too bothered because I've already closed out the majority of my position at TP1. So that is totally up to you how you want to do that. My recommendation with this strategy would be close 80%, hold 20% towards final TP. I only have 2 TPs trading this. So let's see how this trade ends up playing out. As you can see again, swing low gets taken. What do? You move your stops to the swing high. You keep trailing your stops in the profit as the trade goes in your direction. So as you can see again, you move your stops to that swing high after taking the swing low. There's a fair value gap here as well, which should get respected. As you can see, it didn't, it got inverted, and what did the price do? It took out that swing high. So you would have been stopped out in the trading profit there. Hopefully this makes sense, guys. If it did, make sure to leave a like, leave a comment, share and subscribe. I've tried my best to break this down to a T and just explain every single thing that I'm thinking of inside my brain every time I'm trading in the morning that sometimes obviously you guys can't see. I try to post all of the live streams on YouTube so you guys can learn and watch my thought process every time I trade, but this would be the best way I can explain it. Now, obviously, there's a lot more things that go into this, and that's exactly when, you know, one-to-one mentorship comes into place. Because at the end of the day, guys, YouTube videos, they're very generic advice. They're for the general audience, okay? If you want more specific information, then my advice to you is go find a mentor. Actually apply for one-on-one mentorship, okay? When you get one-on-one direct guidance and access to specific information, whereas otherwise you would not have access to that on YouTube. So if you are that someone, guys, make sure to check out links in the description. It is true one-on-one mentorship. It's not a Discord or a course where, you know, a mentor just chucks you in there and you never speak to the guy again. No, it's actual real one-on-one coaching. You get my WhatsApp number, my personal number. So obviously don't leak that. I appreciate if you don't leak my number, guys, but you have direct access to me. So whenever you have a question throughout the trading week, you can just drop me a message, drop me a voice note, right? If I had something like this when I was first coming into trading, I would have been profitable way quicker with actual guidance and learning from someone who's already done it. He's already achieved the success and the results that I want to achieve. It would have been so easy. So yeah, I'll leave it with that, guys. I hope you lot enjoyed the video. I hope it helped all of you. If it did and I provided some value, make sure to drop a like. I'd highly appreciate it. But other than that, guys, I'll see you lot in the next one. Take it easy.